All right. Oh, 8 likes before we even began. Thank you guys. Thank you. Let's bring the mic a little closer. All right. All right. Well, welcome everyone to Thursday's live stream. If you guys missed out on Tuesday's stream, make sure you guys go back to the channel and rewatch the replay. I always highly recommend you guys do that. I do have a major news announcement. Let's see. Hold on a second, guys. Let me actually. Alright, so the most updated subscriber count is at 452. That's absolutely amazing. We are about to hit 500, most likely by the end of this month. So again, thank you guys so much for subscribing, for liking, for commenting, and just simply just watching these streams and these videos that I've uploaded. And we're back. All right. Okay. So as I was saying, hopefully you guys are finding this information very useful, applicable in your own trading journeys. And that's kind of been my entire goal for all these streams for quite some time. Hey, what's up guys? We're just about to begin. Hello. Welcome. Hey, let's get to 10 likes, guys. That was very quick. 8 likes before we began. We're about to hit 10. Welcome guys, welcome in. Hello, do nothing. Hello. Hey, what's up, Joel? Hello guys, hello. Hey, I see you guys' reactions in the chat. Alright, so let's begin. So I want to start off with a little bit of some statistics, okay? Some just simple facts here about where the stock market is at currently, okay? So since this year began, alright, the S&P 500 is up almost 26% based on today's closing price, right? And I believe based on historical records that go back to 1950, this has been the 5th or 6th best year since 1950. That's pretty incredible, right? I believe it was the 5th, but if I'm wrong, it could either be the 6th. But either way, it's somewhere around there, right? And obviously, we're not even into the end of the year yet, so maybe it can go to 5th or 6th, who knows, right? So it's not decisive yet, but we're somewhere around there. And I believe we've had like 40 plus all-time high price prints in just this year alone. That's pretty good, right? And based on the fact that the market has doubled, right? It's literally doubled since the 2022 lows. Okay, that's clearly telling you something is up, right? And we're clearly in a very, very strong bull market, and we have been in a very strong bull market ever since, well, the bottom that was formed in 2020 and also in 2022. Now, obviously, most of 2022 was a very almost a year-long bear market, but we were out of that pretty quickly as we head into 2023. And so, truly, for me personally, from a technical perspective, the dip that we saw in October 2023, and obviously my perfect analysis, literally, of the transition between October to November, and the fact that we're going to be seeing a market bottom in between that transition from October to November of 2023 for a market bottom was absolutely on point. And from that point forward, we did not look behind, right? And so now, let's talk about the actual subject in hand about, for the stream. So, should we be cautious about this current euphoric move to all-time highs for every single index that we're looking through tonight, right? SPY, QQQ, okay, now IWM hasn't made a new all-time high, but rather a 52-week high. So should we be concerned about this euphoric move up higher? So generally, no. All right, this is all just emotional, euphoric move to the upside, which will ultimately lead into some pullback and basic technical consolidation, just from a technical angle. Okay, now one thing that truly concerned me, hey, what's up guys? Hello. The one thing that truly concerned me was that 2 days ago we actually saw, okay, bond yields, okay, like the 10-year and the 30-year. They had a large jump as well, along with the overall equity markets, and we saw bond prices plunging. Okay, now today, obviously, thanks to the 25 BP or basis points rate cut from the Federal Reserve, we got that nice push lower on TYX and TNX, so the 10-year and the 30-year yields, which is what everyone tends to look at, right? So this is good. Now, the only thing that I'm again worrying about is that initial big jump up higher in yields when we didn't even get that rate cut, but rather from the actual election results. So to me, it seems like the markets are about to be a little bit more sensitive to any political catalyst or news that we're about to have in the next president, from the next president, excuse me, right? And this reminds me of the trading environment back in 2017 all the way up into nearly 2021, right? Where we see a lot of volatile price action and, excuse me guys, and this big rise in bond yields, right? So if you go all the way back in 2020 to all the up into 2021 and 2022, we've had this large rise because again, there were increasing rates, right? Now, if you go all the way back, right, there's a lot of volatility in the overall bond markets, and that's something that I can potentially foresee in the bond markets, with bond yields just absolutely just ranging in very volatile action, and people who were in the market back then know this too. You guys should remember this, right? And so, to me, this seems like we need to keep a pause on that overall long bond thesis that I was tweeting about and posting about everywhere before elections, obviously, because of the fact that we're seeing this increased sensitivity to potential political catalysts that are outside of the market. So what we like to consider noise is suddenly becoming an oversensitive factor to the overall bond market. Okay, and so that's something that you guys need to consider as we move forward. Now, back to the equity markets. Okay, so again, from a technical angle, for anyone who's just joining in, this euphoric move up higher, okay, isn't to be too much of a worry right now, because again, this is still a good measured technical move up higher, right? This is what we're seeing now. This is reality. We're about to hit my outrageous targets of the S&P 500 ETF at $600. We're less than 5 points away, and for SPX, or the S&P 500 index, its own outrageous target of 6,000, right? We're literally an inch away, so that's great. Now, if you guys take a look at the SPY futures here, we've actually hit that 6,000 whole number, right? So this is really, really good. And on top of all of this, okay, I mentioned to my CFO Stream Watch report readers that November, from a seasonal standpoint, okay, from the average seasonal trends, we tend to see the markets doing extremely well during November, which also trickles down to December. And on top of that, right, small caps, IWM, or the Russell 2000, tends to do a lot better compared to the overall benchmark markets or even NASDAQ itself. And just like I've stated multiple times a couple months ago, a couple weeks ago, we've seen the Russell 2000 seeing broader relative strength and more strong, well, a lot more stronger market breadth overall compared to NASDAQ, which is considered a leading market, a leading index. So obviously, yesterday's a large move in the Russell 2000, or even on Tuesday's large move, they were literally, well, this index is specifically, this market cap, this asset class, small caps, were doing extremely good compared to the overall leaders. And even with this gap up, it's still doing a lot better compared to the NASDAQ from my perspective. And I think we can see that continued relative strength in the IWM, or if you want to take a look at the more, quote unquote, valuable small cap stocks, okay? IJR, okay? This is the iShares Core S&P Small Cap ETF, okay? Or I believe there's also another one called no, actually, no, this is right. I think I'm confusing myself with another ticker there. But so basically what I'm trying to tell you guys, okay, is that all we need to see is that it's some good consolidation, a good digestion of this very, very large move from a technical perspective. And as long as we can see that good digestion, for example, for IWM, as long as we're able to hold over 233, which was my next major profit target that I had set over a year ago, I think. And obviously I pinpointed this target for months, this entire year. We're finally over it. So as long as we're able to hold over this major profit target level, or major, well, previous resistance level, now new support level, and we continue to hold it as a new level of support, we should be able to see this 233 being a continued area of demand for buyers. All right, and so obviously we want to see some sort of a sideways consolidation to give us a nice bull flag, to give us that nice next move up higher. And obviously towards my official end of the year, okay, again, end of the year target of 240. Okay, now again, just as a quick summary for anyone who's just joining in now, as the title says, right? This euphoric move, from a technical perspective, we shouldn't be worrying about it too much. Because again, all we need to do is digest, consolidate, and move up higher. Because again, as I've been saying from every single one of my videos so far and every single one of my streams, we should be seeing a continued move up higher into end of the year based on technical perspectives, based on option flow perspectives, and just based on overall sentiment perspectives. All right, so we have this trifecta of all these factors layering on top of each other, right, and giving us a nice overview of where the markets should be going by the end of this year. So now, put that aside for now, and take a look at the fact that the overall bond markets are signaling something is up. Right? Because of the fact that we've had this large move up higher, we saw bond yields moving up higher, and now we're also seeing that effect trickling down with mortgages, right? Mortgage rates, right? Mortgage rates have climbed up higher since September lows, along with bond yields as well. Right, so again, we topped out in bond prices in September, and we bottomed out in bond yields, or treasury bond yields, in September as well. Because again, they're inversely related, if you guys did not know that. Now, the Federal Reserve, Jerome Powell today, said that they're not too concerned about this rapid move, right? And also from a forward-looking analysis from the Fed itself, they are looking at the very short-term rapid increase in a possibility of of inflation potentially spiking again, which can delay their 2% inflation goal, right? But again, they're aware of that, but they're not too concerned yet, because again, they're going through this data by data, month over month. Now, usually, the markets are always telling us what could happen in the near-term future. Why? Because it's always discounting what it's perceiving in the future. And based on what the bond markets specifically are telling us, that we should be absolutely, at least keeping in the back of our heads, that there is a slight possibility that we could be seeing an unwinding of the efforts that the Federal Reserve have made for the past 2 years, right, with increasing the benchmark interest rate or the federal funds rate target ranges, and completely dismember the or dismantle, I think is the correct word there for what I'm trying to describe, their current economic monetary policies, right? So, to me, from a personal perspective now, it seems like we should be seeing, a potential correction as we head into fiscal year 2025, at least in the very first quarter of that year, of next year. Maybe into late January to early February is when that could occur. But overall, from a technical perspective as well, we should be seeing that, but we should be seeing more worries coming into the overall bond markets as this sensitivity to outside noise increases. And what is that outside noise, guys? As I've said earlier before, political policy, right? So politics, right? And we've again witnessed that back in 2017, all the up into 2020 and even 2021, right? Again, you guys can just take a look at the charts of the 30-year and the 10-year, and you guys can see what I'm talking about, right? Very, very volatile moves on every single one of those yields, okay? And that is going to have an effect to what the Federal Reserve has planned to do for 2025 and 2026, which is the reason why I'm saying that we need to pause our my current analysis and plans for bond prices for 2025 to 2026, because I initially planned that we can be seeing some very good returns just on bonds alone, like the TLT, which is the 20+ year ETF, Treasury bond ETF specifically, and then IEF, which is the 7 to 10 year Treasury bond ETF, and also IEI, which is the shorter term, the most short term 3 to 7 year Treasury bond ETF. Okay, so for now, we need to wait until next year to see whether or not these bond prices can stabilize enough, right, and not show that sensitivity, that oversensitivity to political factors, which is also considered outside noise in the overall stock market. Does that make sense, guys? Right, so we're kind of in this weird, I would say a very, very weird gray space as to whether or not this overall move up in the stock market is sustainable or not sustainable from a short to long-term perspective, right? Right now, we just need to focus on the day-to-day, the week-to-week, and the month-to-month price action and price trends. Right, and I'm trying to make sure that you guys are not being confused of what I'm trying to say here. I'm just saying that we need to be cautious as we move forward and head into, well, the last month and a half that we have left for this overall year. And again, I'm still very much bullish. How could you not be? Right, how could you not be? Right, the overall markets have returned just this year nearly 26%, and it could be almost 30% by the end of this year. Who knows? All right, and so the overall market returns have been absolutely amazing since the lows of 2022, right? And obviously the official bull market began in 2023. So all of this was just a front running into the official Fed rate cuts, as I've told you guys for I don't know how many times, or and for how long as well. But I believe I started to say that back in early last year, right? And I obviously gave you guys the official prediction of the rate cuts that are going to occur back in August, mid-August of last year. Okay, if you guys don't know that, I specifically said that rate cuts should be coming in quarter 3 of 2024, or right before quarter 3 of 2024. And guess what? We got the first official rate cut during quarter 3 of this year. Okay, I'm not trying to brag here. I'm just telling you guys exactly what happened, right? And obviously that market bottom in October 2023, right? The transition from October to November is also what I gave you guys as well back in July of 2023. I told you guys that there should be a potential market bottom if we do see a correction in July between October to November. Okay, so now that we're really close to this outrageous target that I called out back in I think late August, I believe, the S&P 500 ETF hitting 600 and the S&P 500 index hitting 6,000, I wouldn't be surprised if we see a brief peak over 600, maybe like 601 or 602, and see an immediate rejection back down, right? Where the sellers literally slap down the price, as there's going to be a huge wall here, a wall of supply and sellers ready to hit that sell button on their long positions, or at least take some profits, a huge chunk of their profits at the $600 level. So it's a huge ceiling that we can see a small peak over, but once that happens, I'm going to be seeing a very, very quick pivot back below 600 and eventually see some good solid consolidation between 590 and 600. All right, so a very wide 10-point range, I know, but we're going to be seeing some more volatility as we head into the end of this year and closer to that fiscal year of 2025. Okay, and I'll be giving you guys a lot more details as to why I think we could be seeing a technical correction of at least 10 to 15% in quarter 1 of next year as we head closer again to December. And again, all that information can be found in the CFO Swing and Watch report. So if you guys want to join and become a reader and also simultaneously gain access to the private CFO Discord by becoming a private CFO member, right, a Discord member, make sure you guys DM me on Instagram at ChartsFocus1. My handle is down in the description box down below. And again, this is this week's CFO Swing and Watch report, right? And just to give a quick shout out to this report that I wrote over over the weekend, which is again released on Sunday and sent out to everyone on Sunday. Both of our technical setups, our main swing trade ideas for this week, did absolutely amazing, right? So I was involved in both of these for ADEA, I was in equity, and for Lunar specifically, or LUNR, I was in calls. And if you want to take a look at both of how they did, well, go take a look, right? ADEA, I sold before earnings today. They're right back down to my entry point, which is fine after hours, and there might be another possibility to get in again. But for LUNR, I'm still holding a good chunk since I did take some profits at high of the day, around 75% return. Okay, so this is again very, very good swing trade ideas for this week. We saw both of them doing extremely well. Why? Well, overall, small caps did extremely well, which helped ADEA. But I do have to let you guys know that LUNR did not receive any help from the overall small cap market cap, right? Small and mid caps. Instead, it did its own thing today and yesterday by having a nice hammer candlestick on a daily, I believe. Yesterday, if my memory is not too bad. Yep, very nice hammer, and then today, very, very nice big explosion move to the upside. All right, so the official entry point was long over $9, which is the reason why I'm still holding a good chunk in my official position. But we did get in a little bit early here. I believe it was back in, well, on Monday. Not back in last week, but on Monday. Okay, so looking very, very good. And obviously with my new section here in the report, okay, momentum mentioned, these tickers did extremely well as well. LMND, RDDT, but I would say RBLX and LMND did extremely well this week. Reddit obviously needs a little bit more consolidation now at this point in time because of the moves that we saw yesterday and the day before yesterday as well. Okay. And obviously we had that nice cryptocurrency pick for this week as well, which is Bitcoin, the mother of all cryptocurrencies. Very nice breakout from this bull flag, and we hit that new all-time highs as well. Okay, so again, if you guys don't know what this is my weekly CFO Swing and Watch report. Hey, welcome guys. Make sure you guys hit that like button down below. Hello, hello. A nice surge in viewers here. Welcome guys. So if you guys aren't involved in this report, every single week I do a top to bottom approach to my technical analysis and just overall fundamental and technical analysis actually. And I give you guys this entire breakdown of what you guys should be preparing for into the new trading week every single Sunday night. And now it's not just this report. I also give you guys a private CFO Swing and Watch report technical analysis video that is linked throughout this report, right? Like right here. And if you guys want to watch that video now, it is now public, right? It was private then, but it's now public, and you guys can watch that in my channel here, right, on YouTube. So make sure you guys watch it because it's very, very interesting, and I'm sure you guys will get a lot of good pointers on just overall I guess how-to do's, right? Technical analysis, right? That was a little bit of an awkward statement there, how-to do's, but how to do technical analysis, literally. So make sure you guys watch that, right? But overall, this is my CFO Swing and Watch report. It was a total of 15 pages this week. It's usually around 12 to 13 pages, but I had a lot to say, and I'm glad that I was able to send out this entire consolidated and summarized information of the research that I've done for hours from Friday to Sunday, right? So I put a lot of good work into this for you guys to be able to actually apply what I'm telling you guys in this report itself. So make sure you guys check it out, right? If you guys want the link here, make sure you guys DM me to this week's CFO Swing and Watch report. But then again, you guys can become members and gain access to this report along with the technical analysis video, and also become a private member of the private CFO Discord if you guys join. Well, if you guys just let me know if you guys want to join, right? Very, very simple. I'm trying to make this process as very, very simple. So all you need to do is DM me, and you guys will get a 50% off discount code for your first 30 days. You guys will not regret it, right? 100% guaranteed. All right, I have great confidence in saying that right now. Hey, Joe. Yeah, what he said right there. All right, so overall, if we go back to the topic of this live stream, we shouldn't be too cautious, but we need to make sure what I've told you guys tonight about bond markets, you guys need to keep it in the back of your brain. All right, if you're not being cautious, if you don't have this message that I'm giving you guys about the bond markets and obviously the dollar as well, right? This is not good, right? In the overall longer term perspective, right? It's not good to see these big euphoric moves in yields and the dollar, the US dollar, for the overall equity markets, right? So again, make sure you guys keep this in mind for the near-term future. Make sure you guys are not forgetting what I'm saying here. All right. Okay, so that is it for tonight, guys. Thank you guys so much for all the likes. Thank you guys so much for joining in. There's a lot of people that joined in tonight. So if you guys are newcomers here, welcome in, welcome. Hopefully you guys found this live stream very, very useful. And if you guys are really liking what I've said so far tonight, make sure you guys hit that subscribe button down below. And on top of that, once you hit that subscribe button, a notification bell icon will pop up. And make sure you guys click on that as well so that you guys do not miss out on any of the videos that I upload. And these live streams on Tuesdays and Thursdays at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. All right, and Joel, again, thank you so much for that comment in the chat. He is one of our members as well, and he has been doing extremely well with his long-term positions thanks to the overall report. But yeah, guys, if you guys want this opportunity, grab this opportunity in your hands, right? You guys can join for 50% off for your first 30 days. You guys will not regret it. Hey, I guess I could see your your guys' reactions in the chat. Thank you, guys. Thank you. All right. So again, be cautious. Watch out for the bond markets. They'll become very important as they were back in 2017 to nearly 2021. It's going to be, I think, from my technical perspective and just from my overall personal opinion, we're going to be seeing that overall sensitivity to outside noise, which is, again, political games and political policies, right? And we'll be seeing the bond markets being very volatile, like we saw back in those years. And something that you have to watch out for, as that will also affect the overall equity markets. So, you know, in 2022, guys, just before I leave, I wrote a lot of good information in the CFO Swing and Watch reports. And back in 2022, it did not look as good as this, right? This is a fairly new way of writing my report here. And it looks, to me, very beautiful, right? You know, back then in 2022, all right, we're back. That was like a brief little hopefully we're back. Yes. Okay. So as I was saying before I get interrupted again, hopefully not. Back in 2022, bond yields. Right. I talked extensively. I literally gave I think it was worth it to call it a class, a full class on bond yields and the overall bond markets and how they hold a relationship to each other, why they're important, how they can affect the overall equity markets, and how they can, literally just give you an insight as to what the next action from the Federal Reserve might be. And you guys always ask me, how are you on point or accurate or precise on some of these things, some of these topics that I indulge in, I dive myself into, right? And how do you know which way the overall markets are heading to, or the overall bond markets are heading to? Well, I do this research. I do it for hours on end. I read and give you guys these extensive, basically a summation of my hours of research every single week. Okay, and so I put a lot of time into this, and I really want to make sure that you guys are able to see this, right, and read these newsletters every single week and gain an understanding as to how you guys should be looking at the markets, how you guys should be implementing the analysis that I give you guys, the top to bottom or top down analysis from a technical perspective and also a fundamental perspective, and just give you guys an overall understanding of how the markets fluctuate and how they move in accordance with each other, right? Like the bond markets and the equity markets. Okay. So again, if you guys are interested in joining and becoming a reader of the CFO Swing and Watch report, and also simultaneously becoming a private member of the private CFO Discord, make sure you guys DM me on Instagram at ChartsFocus1. That is my handle for every single one of my social media accounts that I'm on. I'm on every single major social media platforms out there, right? Threads, Twitter, or X. YouTube right here, right? Facebook, right? So again, make sure you guys DM me on Instagram at ChartsFocus1. Okay, so that is it for tonight, guys. I'll see you guys next week on Tuesday at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Have a great rest of your night and good luck tomorrow. Thank you so much for watching.